All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market here. We saw the bottoming volume last time I was on video. We talked about it. Market, not going to close below this level, or probability is very high that it won't close below this level. It's managed to have a little bit of a rebound rally right back to where it was yesterday afternoon. It spent all of yesterday afternoon, so really we've had kind of a breakout, breakdown. Both have been, countered here, and the market, fairly flat since, the Trump tweet from yesterday. So that's the environment that we are looking at. It's an environment where there's not a lot of signals. Stuff in downtrends are still in downtrends. Stuff in uptrends are still in uptrends. And the question is, are some of these consolidators now turning into trends, right? Raytheon, for example, is one of those stocks where, we have this consolidation, and is it ready to turn into trend? And, we've had, yesterday morning, almost a bearish signal. This morning, almost a bearish signal. Neither of them have materialized into anything to trade here just yet, as the consolidation remains. Now, there are two stocks here this afternoon that are giving some signals. One of them is Pepsi, but the consolidation risk on this, it's a very nice bullish pattern, but the consolidation risk on it is still just too high to trade. But we have Procter & Gamble doing something very similar here with it, and the consolidation risk is significantly lower here on Procter & Gamble. This is a company that doesn't move all that much. Its average true range isn't all that high, and if I come down, I'll show you the average true range, $1.40. Right? That's not a huge range here for Procter & Gamble. But they've already had their earnings and whatnot here with them. Nice buy pressure here on it today, albeit not on any kind of great volume. But for the algorithm, volume doesn't much matter. But nice little bullish 3-7 crossover today. You'll notice the stock opened below the 3, the 7, the 20-day moving average today, trading above all three of those. And we've seen this happen. We saw this happen shortly after earnings, and then kind of go into a little bit of sideways spin. We saw it happen right back here in March, where, stock, pushed on into a continuation of an upward trend. So going to go out and make the first challenge trade, Procter & Gamble. Now, PG here. If we come and we look at the options, and I'm stalling on making the trade exactly, just because the stock isn't going anywhere. So want to just make sure that I kind of show everything here with it. But the entry trigger, we have Procter & Gamble bullish here. Used in the challenge. Yes, it will be here. All right, and if we come into the challenge setup, right, trade allocation, 40% per signal, dropping to 30% after 3,000 worth of gains. So, 40% of 3,000, right? We're looking at about 1,200. They're in that range here. So, we're also coming out and need a 30 to 60-day option. We can start here with the Junes. We can come in with the June monthlies, and then there are a couple June weeklies. But, this one's pretty easy as far as option choice, here to make. It's right here on the 21st of June, 105s. And if we come in here, let's see how many contracts we'll need to get to our 1,400. 5 looks like it'll be the magic number here. Yeah, 1,300 there. So we'll come in and we'll trade 5 of these. And coming down here, I'll see if I can fill it here at 257. See if it'll fill that. Yeah, it filled that. So 5 contracts here of Procter & Gamble at 257 on the 21st of June. Let me just make sure the alert goes out here. And then we'll fill in the spreadsheet. So ticker PG. All right, price was 257 here. Number of contracts 5. The strike is the 21st of June. 105 calls. And we'll make sure that goes out. There we go. All right. So in the trade, alerts out. Let's come into the spreadsheet here. We'll update that. I did put the spreadsheet link there into the message feed if you want to check that out. But ticker, Procter & Gamble, entry date today, 5:10 p.m., right? PM session here. The option here, #21st of June, 105 calls, right? Option entry price here was $257. Contracts 5. Now, stock price here on the entry. Stock price is 105.60 here on Procter & Gamble. I know it was 2 pennies different when I got in, so it's not 100% there, but 205.60. And price of the average true range here down here at 139, right? So average true range at 139. And for those of you not familiar with average true range, that's pretty much over the last 14 days what's been the average range of the stock during that period on a day-to-day basis, right? So $1.39. What does that put it? It puts a stock exit level here at let's change that up there at 104.21. So if Monday morning at 8:30 a.m. my time, 10:30 Eastern, Procter & Gamble's under 104.21, then I'm going to take it and move on out. The stock profit level 108.38 is where I will take a gain and look for the first exit there, and then we'll just get this populating here with Procter & Gamble stock price here, and this is always on a 15-minute delay, 15-20 minutes as it's auto-populated by Google. Now the auto exit date, right? If we come back and look at the challenge setup and the auto exit here, 3 days without triggering, step 1 or 2, we're exiting, so let's get that date filled in here. So 3 trade days from today, we are looking at what, the 15th, right? So 15th p.m., 5:15 p.m., and 2 days later, 5:17 p.m., right? So that's the 5-day, the 3-day mark, and the 5-day mark. There is no trade close date, trade exit price. Just going to put in the current price right now, even though we're still in it, but $257. And you can see cash in, cash out, gain, loss, and those will be, let's see, something changed on those, so I'll go and fix those here shortly. But we put $12.85 in, and the trade is currently open. All right. So we are in Procter & Gamble and going to run with that here into the weekend. That is the only signal that is on the board right here. If there were more than one signal, would go and trade that here and make that happen. But there is only one signal on the board right now. Okay. All right, and I'll play with that here in just a second. I know what it needs. So anyway, Procter & Gamble in running and first trade of the challenge. So for those of you kind of newer to or didn't see the test run that we did, very methodical, very systematic, not a whole lot of decision making to happen, not something where I have to go and look at the chart and go, well, what about this level and that level, or pick a stopping level or anything like that. Everything's all set and good to go. Now with Procter & Gamble, right? We look and we go, okay, where's the exit point? The exit's 108, right? The exit's above 108. Can it get there? in 5 days? Yeah, it sure can, right? But that would be quite a move for Procter & Gamble. That's not kind of the norm. It's had plenty of those in the past, right? But it's one where two average true ranges on a consumer staple stock, just a little bit different than two average true ranges on a tech stock. It is something where, could we go in and alter the average true range to get it to more reflect consumer staple stocks rather than, what the norm of the stock is or what most stocks are on the watch list? We could, but, in all the testing we did, it was just one of those where it didn't make a substantive difference. It was one where a lot of times we'd end up getting out and on a gain, but without hitting that two average true range level there. And I would be surprised if Procter & Gamble something of that nature here with it. Obviously, there are market risks and all of that associated with this market, and what goes on with China said, Trump said, and all of that. That all exists and isn't going to go away. But in on Procter & Gamble and the signal here right now. Okay. All right. As far as other stocks that were close to triggering here today, I already talked about Pepsi. Very close, just a little too much consolidation risk involved there. Twilio this morning, I mentioned, had a good shot of triggering. It sold off with the market this morning, but then it's failed to really kind of come on back here this afternoon. It's just shy of a trigger. It could be a trigger by the close of the day today, but by the 12:30 mark, it was just shy. In fact, it probably only need to rally another 30 cents to actually trigger. So this could be a Monday morning trigger there. Things like Bank of America, just not there, right? Just aren't there. Just haven't materialized. And a lot of things on the downside, even some of my favorite downside stuff. It's overextended. The trends have happened. Now they need a little kind of relief bounce to them or something of that nature, before the next downside signal comes on in. Vulcan Materials here. This is one that didn't quite pull back enough for today to be an upside trigger, but very nice outperformance here today out of Vulcan Materials. And then Walmart. Walmart has a 3-7 cross. In fact, a similar chart here to Procter & Gamble when it comes to Walmart. But Walmart has earnings next week on Thursday. And until the challenge is flush with gains, we're not going to trade anything ahead of earnings or with earnings. We're not going to hold the earnings on anything. It doesn't quite matter here today because it's not a signal, but it could trigger here Monday morning. But with Procter & Gamble already going to simply kind of forgo any kind of signal on Walmart simply because of the earnings upcoming and the fact that the options have that priced in. Not a lot of good risk reward there, and in the future. That won't matter. If we get the signal, we're going to go and make it happen. But at the early part of the challenge, we're going to avoid the earnings elements there. There are a lot of what's really interesting about this, the way the week is shaped up, right? Earlier this week, we got bearish signals on things like IBM and Micron, and we've seen these stocks fall and take a tumble. But, as I went through all 60 stocks here about a half hour ago, and I'm looking at them and great, the computerized report I get shows me, okay, these are the signals, right? But I can come through and take a little visual and kind of get an idea of what signals might be coming. And what was really interesting is there was more potential for upside signals out there to possibly come in than for new downside signals to come in. And a lot of things like Apple, which may be changing its stripes here, kind of need a little relief rally before it could trigger anything bearish. So very interesting to see that here in a lot of the charts out there. Arconic didn't quite get enough of a pullback for, today's action to be a fresh bull signal. But things like Boeing, it had its 3-7 crossover last week. It's something that, needs a little rally and rollover to trigger bearish. And a lot of these, that's what they need. They need a little rally and rollover to get any sort of real bearish signal associated with them. Raytheon as an exception there. We do see Bristol Myers with a 3-7 cross down here today, but that's a consolidation risk thing where the consolidation risk is very high the way it measures out on Bristol. Caterpillar, it's had a nice move down. We talked a lot about this one last week, but nowhere close to a fresh, brand new crossover signal. And you see how far it is from the 20-day moving average, right? We have a lot of stocks out there that are starting to get these big gaps away from their 20-day moving average. And, a lot of times we see a little snapback start to come in when that happens. Obviously, some of the news is going to dictate, some of the snapbacks and how those happen or if those happen and all that jazz. But, definitely going to have some headlines over the weekend. And, we'll see kind of where the market wants to open up on Monday. But, we saw a lot of volume on the downside this week. We see some breakdown in some of the weekly charts, some of the longer term charts, really starting to break on down. But we also see some of the things like a FedEx and a Caterpillar and Alcoa, some of these stocks that have gotten beat up to a large degree. They're in oversold territory, right? And so the propensity for a bounce is very high. Last one I wanted to show you here that could trigger as early as Monday morning, and it would be an upside trigger if it triggered, is Honeywell. And, we talked about Honeywell on earnings. We talked about Triple M on earnings. And, hey, you go buy Honeywell, you short Triple M, and you play the difference between the two. And, that's been pretty dramatic here over the last 2 weeks, that difference between the two stocks. Here's Triple M. Triple M just absolutely tanking. Honeywell, holding up very, very well. This is one where if it starts to get back up above that kind of 171.5 mark, could easily trigger bullish here on the algorithm. I'm not sure what the consolidation risk would be, whether it's consolidated long enough for the consolidation risk to be low, but definitely one that could pop up on a bullish side here next week. Raytheon here as well. This is one where it's showing consolidation risk is very low right here, and that it's likely to move into a strong trend. But what Raytheon hasn't given is that trend direction. It hasn't given the trigger of, hey, the direction's going to be up, the direction's going to be down, and that's what I'd love to see or waiting to see here on Raytheon. All right, so those are some of the stocks out there on the watch list. If you want a full rundown of the stocks on the watch list, go ahead and check out the spreadsheet. And the spreadsheet has all of let's see here. There we go. Spreadsheet has all the stocks that are on the watch list right here. If you want to check out, how the ATR method works or the sorting method works, go ahead and check those out. There's videos right here that you can just click and go. And then, some of the general guidelines of it right here in the challenge setup and execution. And then you can get the entry triggers, trade date, the trade data, and then all the video recordings, here on this spreadsheet, and access them, through that. The link for the spreadsheet will be changed from time to time, from week to week, just from a security standpoint, and we'll be adjusting that here as it goes. But we'll post the new link when it is up. Now, one last thing that want to address: airlines. And airlines have held up extremely well here today. And this is a group that held up very well yesterday. as well. In fact, on a lot of these, American Delta, we haven't seen this 39.1 go bearish at all. It's held up extremely well. These are stocks that on the next 3-7 crossover to the upside could easily trigger bullish, right? But on a lot of these, you do have some of these lower highs, this kind of big old kind of bearish pattern emerging here. But, it wouldn't take much to break it and launch itself forward here. But the signal's not in yet. It would take that kind of 3-7 crossover action to happen. And they could happen as early as next week. It wouldn't take a whole lot, for it to take place on Delta, American, Southwest. All of these, they kind of look very similar when you compare the charts. The airlines that are in the challenge watch list here are American. American and Delta. Those are the two that are on the challenge watch list. And if they signal, we'll look to go ahead and play those aggressively. Thanks for hopping on. Have yourselves a fantastic weekend, and we'll talk to you Monday. Take care.